right? It's been a wild and crazy August. I'm not going to go over it too much, but August 5th, if you think about it, just 3 weeks ago was the day we had that perfect storm on Monday, right? They called it Black Monday in Tokyo. We had that weak J. Powell meeting. We had that bad economic news that came out, the jobs numbers on Friday. We had the war in Israel, the VIX trading up hard. We had the Japanese stock market raising rates with the carry-off trade getting unwound. We had the crash of the Japanese stock market. We came in on Monday and we sold off hard. It is now the end of the month. We've gotten back all the losses, plus some of what we had that day. Some of the tech sector has not regained all of the prices that we had back then, but we've done a pretty good job in the last 3 weeks of regaining all that momentum that we had in the beginning and the troubles we had in the beginning of August. We had Dow, 41 Dow, S&P 5600. Market is on fuego, ladies and gentlemen. Okay, yeah. That brings me to Wednesday, NVIDIA earnings. Imagine this. You know, when your Uber driver, when the guy selling hot dogs out on the street is talking to you about NVIDIA, that the world is a brand new place. I love it. I love the fact that everyone is involved in the stock market and involved in their future and building a portfolio and investing in their future and investing in stocks, not stuff. For me, I love that kind of stuff. Imagine this. In New York City, there were NVIDIA earnings watch parties. People were sitting in bars and they turned off all the sporting events and they were actually watching the NVIDIA release in real time. That's unheard of. In the old days, people would do that for the Academy Awards, but they wouldn't do it for some stock earnings release. What does that show me? That there are 50 million plus retail investors in the market, and there are people all over the world who have a vested interest in NVIDIA, in tech, in AI, in the stock market. For me, that's incredibly exciting because one of my life's mission goal is to educate and motivate and stimulate people to be involved in the market, to be involved in their future, to have an investment account, to be traders. You guys are on TradeZero, an amazing platform. You guys are trading the market and investing in the market. That's exciting. The whole narrative has changed. People really have a vested interest in their future, right? Think about it. If at 18 years old, an 18-year-old who puts $250 a month into the S&P 500 by the age of 60 will have $1.4 million. That's an incredible concept. Everybody, during COVID, 50 million new retail traders came into the market. All the barriers are down. So what ends up happening this Wednesday? This Wednesday, the release of NVIDIA earnings was the largest anticipated earnings release in a decade. Obviously, we know NVIDIA is a stock that on February 2023 was trading at $108. In February 2024, it was trading at $900. The stock has had a meteor rise to fame and glory, right? It is the best of breed in AI, right? It is making $40 billion worth of growth, 200% growth quarter over quarter. It is best of breed. Jensen, father of AI, is the CEO. So the stock, which is part of the Magnificent Seven, best of breed in the AI space, the sector that has taken the stock market all to record highs across the board, is all about NVIDIA. All eyes are on NVIDIA. The rise has been amazing. In April, the stock went from $934. So at the end of the first quarter of this year, the market had the best quarter since 2019. The stock, NVIDIA, is trading at $934. If you ask people, maybe you want to buy, invest, and look, disclaimer, I'm not your advisor. I'm not telling you what to do. I'm trying to forensically explain to you what's going on. Okay, what the heck is going on? And trading at $934 after this incredible rise from $108 to $934. Everyone said it's too expensive, it's too frothy, the valuation is crazy, I don't think it can go any higher. I understand what they were saying. Then we had that amazing, beautiful 10% pullback, a very healthy pullback in April of 2024, just a few months ago. And NVIDIA went from 934 or 946 down to 734, sold off 200 points with the market. What we look at is anything fundamentally changed in the NVIDIA story? And the answer is no. However, when people had the opportunity to buy NVIDIA at a discount on sale, they ran from the movie theater with their hair on fire screaming, no, 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 no. I can't do it, which makes no sense. That was an incredible opportunity. The story had not fundamentally changed. So the stock went from 934 to 734. Awesome, amazing opportunity. A lot of people took it. A lot of people did not. The stock then, May, June, July, proceeded to go into the next earnings release, June, and it went right back from 734 to 946. On the day the earnings came out, and they had blowout earnings just like they did this Wednesday, the stock went from 946 to 110, announced a 10-for-1 split. The stock split and went down to 110.
Yeah.
Then it went all the way back to 140 post-split pricing. That was its record high. And then once again, everybody's saying, oh my God, it's too expensive. They missed the boat once again. You have to realize markets go up and markets go down. In a market that has had the trajectory of this market since 2020, right? We have had so few opportunities to really buy this market because the market has been in an absolute bullish mindset, right? The market is going up, up, up. It's absolutely amazing. So when markets do come in and they do have a pullback and they do have a sell-off and they do have a rotation and they do have a consolidation, that is the time that you need to look and make a shopping list and find the stocks where nothing is fundamentally changed and look at these times as times of opportunity and not run from the movie theater, right? Those are the times that the bears come out of hibernation. They pull back the curtain and they go, I told you so, I told you so. But those bears have had very few opportunities to do that. Although when they do come out of the cave, they do dance around like the dancing bears do, right? And they try to make a big thing of everything, but they have not been the prevailing wind. The prevailing wind has been the bulls. So all eyes were on. So you missed the opportunity in April. July, markets sold off again. NVIDIA did come in 10, 15%. Once again, a missed opportunity. The stock has been on a tear. On Wednesday, it was trading at 125 post-split dollars. The story has been great. The fear amongst most people was, can they continue this hyper growth that they've had, right? And continue that growth. Is that possible, right? And also Blackwell, the company that's making their new product, the chip, and had a lot of, there was questions whether they were going to be able to deliver on the new product. That was one of the fears going into the earnings release. Wednesday, all eyes were on NVIDIA. Market closed. Stock was trading at $125. The earnings release was extraordinary. Okay? We beat on earnings. We beat on earnings. We beat on revenues. They announced a $50 billion buyback. We revised the Q3 guidance higher. Okay? And the stock, unfortunately, it went from 125 to 127 and then down to 115. Well, the question is, why did it do that? Okay? It's a legitimate question. There are people in this stock from all different prices. There's just a bit of profit taking. The story has not fundamentally changed. Once again, this is nothing more than an opportunity. The stock is a monster. Everything about the earnings release. Now, the one thing that came out about the earnings release that the media likes to pivot and talk about a lot is that there's descending growth. Imagine this. They have been growing at a 200% growth level for the last 3 quarters. And this quarter, the growth was 190%. So they want to harp on the fact that is the most important thing that they could come up with, right? And they're going to call that and tell the story that is descending growth. Legitimately, yes, it is descending. But think about how high the bar is. How high is that bar that at 200% growth, quarter after quarter, it goes down to 198%, and they think that that is a bad thing. The company has huge sustainable growth. They are the best of breed. They do have a new product coming out. Their growth around the $30 or $40 billion level year over year. The fact that you've got Apple and Amazon and Microsoft and Micron and AMD and all these companies are going to be in need of their product. So you've got the third and fourth derivative of the AI NVIDIA story that is going to trickle down into a whole nother broad level of the AI tech sector. That is going to hyperbolic growth once again coming into the next quarters of NVIDIA. We are in the second inning of a long 9-inning game that's going to have a really nice result. You need to analyze, has the story fundamentally changed? Is there a shift in the persona in the company? Is there any shift in any part of this story? And short of a small descending growth, the story is still a strong one. They are the best of breed. They are massive and global. There is a second, third derivative of this story that, look, back in the 2000 internet craze, the big internet chip companies back then were selling to startup companies. They were not, right? So that when everything folded, and you had that big bubble, right? That was the problem. The companies that they were selling to were not huge stand-up companies. They were small startups. So when everything started to go south, everything went south. There was no foundation. You realize that NVIDIA's customers are governments, are all people in the major government sectors. Their customers are Micron, Microsoft, AMD, Apple, Amazon, Google. Those are the customers buying NVIDIA's products. Does anyone on this call think that those companies are going under, or they are going to stop buying these best-of-breed products, or that they're not going to have the incredible growth? Before NVIDIA's earnings came out on Wednesday, you had the results of CrowdStrike. You had the results of CRM, Salesforce. All 5 other chip companies came out with their earnings results, and all 5 of them beat. One was up $9, one was up $6, one was up $5. So you need to look at the whole big picture. So think about it. There are a couple of scenarios could have happened. They could have had the same blowout earnings. Stock could have rallied and gone to 150. And then everyone would have been complaining, oh no, I missed the ball again. It's too expensive. But that didn't happen. What happened was they blew out the earnings and people are taking profits. People are fearful that things have changed, that the descending growth is a real story and a real factor. September's coming along. It's a seasonal story with weakness in the market, right? And a slowdown overall in volume. And they're going to just sell stock. We don't know where they bought it. Maybe they bought it at 90 or 110 or 120, and they have huge positions. At the end, today's 120 handle on NVIDIA may be the most recent low that we see for a while. I just did an interview with Dan Ives, #1 tech analyst in the world. Check him out. He's on every TV station in the world. He and I have a TV show called Einstein and I. I'm wearing the jacket that we have. He's the smartest guy. He's the smartest guy in tech in the world. He says that we're probably going to be looking at record highs come October, November. So I trust him. He's a smart guy. So that's the story, what happened in NVIDIA this week, right? It's an extraordinary story because, as I described to you, 2 years ago it was at 108. Last year it was at 900. It then went to split year after year, earnings after earnings. The stock is blown out in every possible way. This is a revolution. AI is a revolution. We are going to be living with robots. And I know there are probably out there who are fearful of the AI story, that it's going to outsource human beings and that it's not going to be beneficial. And that if you're a young person looking for a job, then the AI is going to out you and you won't be able to get a job and all that kind of garbage. The research that I've done, look, I know I look like Einstein. I'm not that smart. I surround myself with smart people. I ask people in the know what they think before I come on to talk to you. I spent an hour with Dan Ives. As I said, the #1 tech analyst in the world. He's the guy who called NVIDIA at $108. He's the guy who called Apple. Think about it. Apple's earnings, the last earnings report was blowout. Yet the price action after the earnings release was a negative one. The stock traded down to 190. Where is it trading? That was in June. Where is it trading today? 230. With every company out there calling for a $300 number on it. So think about the mentality and the mindset around investing in your future and investing in the markets. When you like the people, the process, the product, and the profitability of a company, right? And the market all sells off. It's like they throw the baby out with the bathwater. I don't like that expression, but sometimes that's the case where the whole market comes in, and that's what markets do. Today, the market is selling off a little bit. There is some sell pressure, and the question is why? Legitimate question. When you have a good month like we had in August, where irrespective of all the wars and that devastating sell-off on August 5th and all this other stuff going on, okay, people are yet the market is trading at record highs or maybe 1% off the record high. Dow 41,000, S&P 5,600, NASDAQ, the Russell, all of these indices. There's enthusiasm that I've never seen before. Perhaps it's irrational enthusiasm, but these are real numbers, real money, real companies that are doing well. And I believe more than 70% of the S&P has blown out earnings and guidance. So when you have a month like that, in the eyes of all this potential disasters, we've got two global wars going on. NVIDIA is a very global story, okay? But in the eyes of all the potential, we've got interest rates, we've got economic data that's flip-flopping, right? One day we're not producing enough jobs. Next day we're not. The jobless claims are less. PCE number came in today. Another important fact that I wanted to share with you. Personal consumer expenditure, right? One of the high flash inflation target flags, right? This is one of those things that the Federal Reserve looks at highly to gauge inflation. Today, everything came in right in line. The consumer confidence is trading at record highs. Ladies and gentlemen, you guys are on TradeZero, great platform. This market is not trading off of fundamentals. It's trading off of technicals. It's trading off of foundational great stories. These companies are long-term. I've never seen there's never before in history been so many stocks that are trading in the hundreds, $300, $400, $500 range. We've had more stocks split that were trading over $1,000. The Amazons, the Netflix, the Googles, the Broadcoms. That's never before happened. So look, and this is all in the eyes of last year we had a massive regional bank crisis. We've come back from that. We had the Ukraine war, God forbid. We had the war in the Middle East. That's huge. That's affecting the price of oil. Okay? We've had interest rates. We've had COVID. We've had all these things. Yet, the market is trading off of record highs. This week is no different. PCE number, all the labor numbers, everything that came out today was right in line or better than expected. That's why we opened up 20 handles. The NVIDIA earnings, right, were blowout earnings. Trust me when I say that right now, the fact everyone's going like, well, how come if it's blowout earnings, why isn't it trading at 150? Look, the stock has been on such a tear. Stocks sometimes need to pause when they kind of build back their momentum and then go higher. And I believe that's probably what's going to happen. Dan Ives, way smarter than me, believes that's what's going to happen. So we find ourselves here on a Friday at the end of August, wondering what is the next move? What's the next shoe to drop, or what is the next catalyst to go higher? Why is the market selling off today? Because I believe it's profit taking. I started to say that when markets are strong in a month and we come to the end of the month, you historically see the market sell off on the last day because there's naturally profit taking. There are a lot of people trading this market like yourselves. In the old days, there were not that many traders. There were investors, right? Large hedge funds, the big whales, high wealth people. Now there's 40, 50, 100 million people are day trading and swing trading this market. That is a lot of volatility and a lot of momentum and a lot of people involved in the market. And you're also seeing hedge funds and institutions, in order to be able to support their assets under management and not get redemptions, they, over the last number of years, from going from a buy and hold stature to trade the market as well in order to lock in profits. We've seen the market, it goes up 1,000, down 1,000. Well, if you want to be able to support your customer and go back to them with a positive story, well, you're going to have to buy it low, sell high, take profits, get back in, rotate out of the high-tech flyers, get into the Russell mid-cap, small-cap. You've got to be constantly moving, constantly trading, constantly buying and selling. That is something that didn't happen as much in the past. In order to maintain profitability as a hedge fund or an institution in this market, you got to trade. So when you've had a really solid month of August, even in the eyes of all the negative stuff going on, you're going to see a bit of a sell-off by the end of the month. And I kind of think that's where we are now. You know, market is now trading down. We went from a solid bullish day to definitely a sell-off right here. We had the same thing happen yesterday. Yesterday, markets were on fire. Midday, there was rumors of an attack on the Middle East of American troops, and the market sold off hard. I think today's sell-off is nothing more than a month-end profit-taking scenario. And that's legit. There's nothing wrong with that. That's what happens. In months where the market has been down, you will often see what's called window dressing, where they'll buy up the market to pad their P&L so that the stocks they're long look good and the stocks they were short also look good. In a month where the market is super strong in the eyes of all this negativity, volatility, fear, and loathing in Las Vegas, you're going to see profit taking at the end of the month. And I think that's why this market is selling. So look, I beg of you all to do your homework. When markets sell off, have a shopping list of the companies that you like. Have a shopping list of the companies that you did not want to pay what you thought were high valuations, right? Because today's low, today's high could be tomorrow's low, right? If you think about it, 734, which seemed very high, or 934 in NVIDIA in May and June, right? You'd beg to be buying the stock at that price right now. So you need to understand net over time markets go up. It's just the nature of the beast. And every sell-off or crash that we've had over, and I don't use the word crash lightly, but every pullback, consolidation, fearful crisis, or sell-off or crash that we've had has been a better buying opportunity than selling opportunity time after time. 1929, 1987, the dot-com bubble of 2000, the financial crisis of 07, 08, and the COVID sell-off. Net over time. Yes, the 07 took 9 years to get back to even. COVID took 3 months to get back to even. The dot-com bubble, I don't know what it took to get back to even. But markets go up. That's what they do. Think about how, when markets do sell off, I beg of you to have a shopping list of companies that you like, the profitability, the product, the people, the personnel, and the profitability, and hold strong on those companies and your determination to make money. I appreciate that you're all on TradeZero. It's an extraordinary platform. David Green, who I know you guys see once a week as well, don't collaborate with many people. This market is trading off of technical numbers really well, right? We're seeing when the market sold off like yesterday, we got down to the 200-day moving average and the stock market rallied really hard. So whatever you're using to trade, if you're using fundamentals to invest in, that's fine. But you could benefit from technical analysis to develop your entry point, because technical analysis determines support and resistance, right? Foundation, right? That's really important. But at the end of the day, if you're looking to learn how to day trade this market, and it's not easy, it is brutal. but it's a way to make disposable income. There are more day traders in the market than ever before in history, 40, 50, 100 million strong. And technical analysis and risk management are the keys to the castle.